Good morning. Well, let's talk about the stock market. I know that with the pandemic, the stock market is affected and many stocks uh, lost value. And if you check your investment account, you'll notice that it might be down depending on what you're investing in. But I think that's the right time to have a list of those survival stocks, stocks that really are performing better than others, so that if you are looking into investing in the future, you are looking into investing in some stock for the long term, you know the stocks you should be investing in for the long term, and at the same time you have an idea on stocks you should be investing for the short term. And we are going to use few criteria to analyze those stocks. So the first one will be to compare the price, the current price, to their 52 low and high to see where they are. And the second criteria will be to check if they pay dividend and how much they pay. A lot of time I like to go with the dividend annual yield percentage. So if it's 3% or close to 3%, that's good. And then the third criteria will be to compare the historic chart, like from 1980 or whatever far you can go in the past to 2020, to see if it's vertical. So if it gives you an appearance of being vertical, then you know that that's a stock that doesn't fluctuate much, and when there is a crisis, it's not going to lose value a lot, affecting your portfolio in a negative way. So those are the criteria that we are going to use to track those investments, that those companies that, in my opinion, if I will invest for long term, they will be my go-to companies. So let's get started. I have my Roth IRA with Charles Schwab, and I have some stocks there that are not performing well. So, but I think we can go past the situation to now analyze stocks that are doing well in our portfolio and the ones that are not doing well. In addition, the one that we didn't invest in, but we know of, it will be a good time to study them as well. So what I like to do is to just think about companies in general that will perform, that we know, and see how they are doing. So let's start with I'm on my Charles Schwab account here, and I just click on research. So I click on research, and I'm going to click on stocks. And here I'm just going to, you can do that on Google if you don't have a brokerage account, but if you have a brokerage account, it's just easier to do it within your brokerage account or your Roth IRA. So here I'm going to put, for example, Johnson & Johnson. So that's G&G. And it's here, and I'm going to click on it. And we have our criteria, and I'm just going to be noting them down. So Johnson & Johnson. So as you can see, Johnson & Johnson, the current price is $126.16. So let's compare that to the 52 low and high. And we have it here is 109 to 154. So it's down, but not too much. So it's, is somewhere between the middle of 52 weeks low and high. So let's go down again to check the dividend, and the dividend here is 309%. 309%, so that's good. And let's check the chart. And here I'll check the historic chart, because the one that we are looking at, it was just for 5 years. So let's go a little bit further than just 5 years. And as you can see, from 2080 to 2020, you can see the shape of it. It is vertical, but yes, it went down and up. And 2008, which was a time of a recession, you can see where it was. It didn't come down all the way down to, prior years. And now in 2020, you can see that it's still up. So it has that vertical tendency. So that's a good stock to invest in the long run. Has good dividend. It doesn't fluctuate much. And the charts tend to be vertical, even in an economical crisis. And if you want, there is the beta here that some analysts will use is when the beta is less than 1, the stock doesn't fluctuate a lot. And depending on how low it is, it tells you that when there is an economical crisis, that stock will perform better than others. And Johnson & Johnson is one of them. And I have it in my brokerage account, and is even, higher. I didn't lose money there than compared to other ones. And I can show you my brokerage account there. Let's see here. And I have it individual account. So as you can see here, I have Johnson & Johnson, and you can see that the account, I have a gain of $20. I have IBM that is low, but Johnson & Johnson went up even during this crisis. And I have HP. HP is down, but not much. So it seems like that's a company that is performing well during this crisis as well. So let's go check HP. And I will go up again and click on research. And we will click on stock. And let's enter HP. HPQ. So that'll be this one here, and the one at the bottom as well. HPEU, HPE, and HPQ. At one point it got split between those two. So the current price is 1686, and the 52 weeks range is 1254 to 2393. The beta is 1.34. So let's see how dividend is paying. Not bad, 4.18%. So that's good. And now let's check the historic chart. And that's a company paying you that much dividend is good to have it in your retirement account, not investment account, so that you don't pay tax on your dividend income. So the tax will be the rate, your tax bracket rate. So as you can see, is a stock that is going up and down since 1980 to 2020. So personally, it will be a stock to invest in the short term. You go in when it goes to buy when it's low, and you sell it when it's high. Because it's paying a good amount of dividend, when you reinvest it, it will affect the loss in case you wanted to sell it when it is down. So I don't know, I have it for not long, but for a stock that is up and down like this, I won't recommend you invest in it for the long term. It will be more a stock to trade. But that's a solid company that it won't fluctuate much, like in a short period of time for you to trade it. So even if you invest in it, it will be for few years until it goes up. You sell it, and when it goes down, you purchase it again. So if you check 2008, during the recession, it went down but not too low. And in 2012, it went down again. And 2016, we see we see it down again. And 2020, it went down, but it doesn't go down as much as in the past. But in 2012, it did. So that's something to consider. So now let's get out of here and look for another company. Oh, we can even try HPE. HPE, which is another branch of HPQ. HPE is $9.82 current price, and the 52 weeks range is 743 to 1759. The dividend annual rate is good, 4.89, and I will say that's one of the reasons why I'm not selling them. And let's check the chart. And the chart here, and that's technology right here. You can see the chart of it, and like I said before, it got split at one point, so it was not too long. 2016 to 2020, that's the year we have the chart for. And you can see that it has been $18 at one point, and I could probably have it at that time though, but I didn't sell it. And that's how, when you invest in some stock that goes up and down, when you don't sell it, you are not going to lock in the gain. So it went up in 2018, and I believe, I'm not sure, but I think I have it before that. It went up to $18, and now it's down to $9.82. So when you don't sell it when it's down, when it's up like that, you sell it, you lock in that gain, and you'll reinvest in the same company later, or you'll invest in another company in the meantime. So yeah, that's how you can lock in those gains. It makes more money when you trade stocks than when you invest. You just reinvest those gains into other stocks in the meantime while you are waiting for this same stock to go up. That's one way of making money as well, trading stocks. You don't have to start with a lot of money. You just have to make sure you don't spend your capital, and you invest more in it as you can. So now let's try another company. Another company that I like is Pfizer. So let's check Pfizer here, if I can remember the symbol here. So Pfizer, PFE, I have purchased a few shares in the past, and I sold it when it went up. So it's $30.90. Because we are on the chart option, it's showing us the chart here. You can see that the chart goes up. It came down in 2008 and went up again. And in 2020, it has not gone down that far, but you can see the shape of the chart. Although it's not vertical, it doesn't fluctuate much like some of them. So in my opinion, it will be a good one to invest in as well. But it can get affected by a recession. And you can see here how it got affected, but it went back up. So now is going down again, but we don't know how low it's going to go. So let's check the summary here to see the price 52 weeks and high. And the 52 weeks set $27.88 to 44.56, and now it's selling for $30.90. So it's close to the low if you wanted to buy it, and you are sure it's not going to go too low, it's not going to go past, it's not going to go below $27. It is a good moment to purchase it if you can and you like it, because it's closer to the lowest range than the highest one. And you can see the beta here is lower than 1 as well, so that means it does not fluctuate much. And now you can see the annual dividend yield is 4.92. That's great. So we have HPQ, HPE, which I will classify as short-term investment. Pfizer will be a long-term one, but they all have great dividend, and I recommend you invest in them in your Roth IRA so that you don't have to pay tax on those dividend income. So let's try another one. What about Procter & Gamble? I came across it while I was tapping Pfizer. So Procter & Gamble is selling at 110.17 now. That's the last price, and the 52 weeks range is 94.34 to 128.09. So it's close, it's somewhere between those two, and probably close to the low than the high. Let's check if it's paying dividends. It's paying dividend now a lot, but it's okay. 2.71% is better than your money at the bank. And let's check the chart. And as you can see, that's how I use criteria to analyze those stocks. And you can do that with stocks that you can think of, that you know of. And you can see it's vertical pretty much, goes up and down, but not much. So during 2008 recession, it was down, but not much, not like in the past. And 2020, it went down, but still hold up its level. So that's a good stock for long term, just like Johnson & Johnson. So which one are we going to try again? Let's try Clorox. I know that many people purchase Clorox during this pandemic. So Clorox, do you know the Clorox? Oh, when I put CL, I have Colgate-Palmolive company. So let's check that company, CL. I know they produce soap, right? So I don't know what else, but they are in household products category. So 65.26 is the selling price. You can see the chart for 5 years. 52 weeks low range is 58.49 to 77.41. So it's quite at the middle. What about the dividend? 270. So it's not bad. And let's check the chart. Oh, we can take a look at the beta. The beta is less than 1, so it could be a company that does not fluctuate much. And paying attention to the beta, it was not something that was in my criteria, but it just reinforced my assumption when I use my criteria, which was to compare the price to the 52 weeks low and high, to compare the dividend, if it's paying enough dividend for you to keep money in, and to compare the chart if it has a vertical trend. And here you can see that it has a vertical trend. In 2008 crisis, it went down, but not much, and then pick it up all the way here. It went down in 2020, but not much either. So CL, Colgate. is for long term. If you like that company, it's okay to invest in it for long term, in my opinion. So I know that during this crisis, it'll be hard for you to come up with money to invest in those stocks, but they seems to be companies that don't fluctuate. Their stock don't fluctuate much. So even during the good time, you just keep an eye on them. When they goes down a little bit, you buy them, because they don't go down too much and they don't go high too much either within a short period of time. So you don't have to buy them during this crisis. If you can, that's great. But you didn't have to, because they just don't fluctuate much. So they will still be around. When you can afford, you invest in them little by little, and you'll have your own mutual fund by investing in those single stock. The exchange doesn't charge any commission at all. So you buy them, you buy one share if you can afford one share, and then when you can, you buy another share again. So which one are you going to try next? Clorox is what we are trying to do before, right? So Clorox, Pepsi, Coca will be a good ones to look as well. I don't have to try them all, but you can try them. And we can use Google as well. Let me see if I'll be able to try Google, but let's check Clorox here. So it's selling at 173.19, and the 52 weeks and high, low and high is 144, from 144.12 to 214.26. So it's quite somewhere between those two, but 144 to 214, that's quite a range, right? Okay, so dividend is paying 246. Okay, it's okay, better than zero something, right? Let's click on the chart here. And you can see the chart is vertical. In fact, I didn't look at the beta. So yeah, from 1980 to 2020, it has, kept its trend. 2008, it barely went down. So that means people we purchase a lot of products that Clorox makes. So it's even during economical crisis, we buy Clorox products, and it is in the household products. So that gives you an idea to check household products to see what companies are there, and see which one are performing better than others during this pandemic, and note them down to see. And then you have a list of those stocks that when you have money, you can afford to invest in them for the long term, if you want to invest for long term. So now let's click on Google here and just put Clorox. Yeah, why not? Clorox stock. In case you don't have a brokerage account yet, let's use Google to see if our criteria will be able to locate all the information we need to analyze. Is getting finance, Yahoo Finance here for us. Why not using it? In fact, the thing is, Google will have in fact, without even going further, you can see the low and high here. You can see the current price up here, but it does not give you the range. Let's click on maximum here to see. Yeah, so even from the Google page, you can do those things. So you can use the criteria, compare the current price to 52 low and high to see where they are, if it's close to the low for you to make a purchase right now if you are trying to purchase, and look at the trend by clicking on the maximum that they can track, which was in 1980 when I hover on there. But then it gives you that vertical. trend. So that's a good one to invest in a long run. And while we are here, which one can we track again here? Let's try Pepsi. Americans drink Pepsi more than Coca, right? Let's try Pepsi here. And Pepsi is selling at 120 for the C's, and low 52 weeks low is 101.42, and 52 weeks high is 147.20. So is somewhere at the middle of both. So let's click on max here. It doesn't show me the dividend. Yeah, dividend yield 3.17%. That's good. So maximum here. Did you see the trend? From 1980 to here is vertical. So 2008 we didn't really see much of a dent. 2020 it went down a little bit, but not much. So that means that's I don't know if it's showing us the industry is in it, but you can see that that's something we consume, a product that we consume even during a recession or a pandemic. Pepsi is still selling their product. So Pepsi is a good for your portfolio for long term, now trading stocks. What about Coca? Coke. Is it Coca-Cola? So Coca-Cola is selling at 42.81. I think Coca-Cola broke down into more than just one type of stock though. Don't know which one I pulled here. So we have $36.27 and 60.13 for low and high. It's selling at 42.81, and the max and the dividend yield is 3.83. That's good. And maximum, it has up and down. It has kind of plateau here, but it didn't come down as much as the past, and it tracked it from 2080 as well. So that's a good one for a long term as well. While your money is sitting there, it's going to be generating dividend income. So it's good to have it on your Roth, in your retirement account, now your brokerage account, if you don't want to pay tax on your dividend income at your tax bracket. It's going to pay you dividend. And I don't know if you have a beta here, but once again, that's something we consume. So it does not go down much. But I think if you are trying to choose between Pepsi and Coke, Pepsi might be a better option because the trend was quite vertical compared to Coca. So that's how you are going to just think about those companies that you know of. And you wanted to see how they are performing, if they are good for short term or long term. So Kellogg here, 3.83% for dividend yield, $51 to $71 for low and high. Is selling at $59 now because it's down, and it has a vertical trend, but it does not fluctuate much. It does not go up very quickly either. You can see the trend is like slowly is going up, surely going up. So it went down in 2008. It's still a little bit down here, but it has that vertical trend, like it's steady type, giving you that feeling. So it might be a good one for long term as well. But if you go to their sector, you'll be able to compare it to other company in the same general milk, in the same category as well. I think Kellogg and General Milk might be in the same category. You have $51 here that is selling, and the price range is $46.59 to $60. The dividend yield is 3.78%. And if we click on max, it has this vertical trend that is even better than Kellogg. So, you know, that's, yeah, how you compare them. You just list them down, and when you're about to make your purchase, you see which one you feel like purchasing. But Kellogg is good for long term, and GIS is good for long term as well. And not all of them will have that trend, so just keep that in mind. We can try General Electric. Here it's selling at $7.62. The dividend yield is 0.52%. It's very low, and the low is $5.90. The high is 13.26. It's selling at $7.62. Let's take a look at the Maximus chart. You can see the chart here. This stock is not a good one to have in your company, in your stock, in your portfolio when you hit a recession. So in 2008, it went down quite close to a decade prior, and in 2020 it went down again close to a decade prior to 2020, and close to, you know, another decade. So if you didn't sell it when it was at the peak here to lock in your again, because if you put it somewhere here, you didn't sell it when it was at the peak here to lock in that gain, it went down here, you sell it, you might have some gain, but not much, because it's not even paying you a lot of dividend. For the dividend to, when you reinvest it, to purchase more share for you, if it goes down, you know, you may not make much profit having this stock as a long term in your portfolio. Maybe trade on it might be an option, but I don't know how often it goes up when you purchase it on the low side for you to turn around and sell it when it goes up. So just keep that in mind when you are choosing what company to trade and what stock to trade and what stock to invest in. Because when you invest for long term, and when you trade, that means you just invest for short term, 6 months in average. So thank you for watching. I'm Afiabi Ojune Libreman, creators of Libreman Consulting L.L.C YouTube channel and owners of Nina's Soap. And our website is ninasoap.com. If you like our videos, please click on like and subscribe. Thank you.